looks like risk trade back on an overreaction to Monday's news that S&P was looking at potentially downgrading US debt. Everything back on the rise again.
Correct, Stephen, that's what it looks like. We've had a stream of really positive data coming out overnight from corporate earnings, and really the US government coming out to really comfort the market that they are going to stop the re-rating. However, how they're going to be able to do that and give more comfort to the market. However, the market doesn't seem to have waited for details. The market seems to have rallied on that good news.
What's our volumes looking like at this stage? Because for the past couple of weeks we have seen volumes below average. Is there more conviction coming into this market?
Stephen, volumes seem to be pretty average. We saw volumes around 11, between 10 and 11 billion last week. We're still seeing that trend. We're not really breaking over the 12 billion traded mark. Monday seemed to be a fairly big day with us down 800 points, with a bit of panic in the market and investors really just bailing out of positions. We only saw 11 billion traded yesterday. Our market up, we traded around 10 billion. So market's not really convinced, but are still nibbling at equities and waiting really for some comfort and some sustained news. We need to have the markets really moving consistently for a couple of days in one direction before they commit large amounts of cash.
Well, at the same time as we have equity prices and commodity prices rising, we also have that gold price rising above $1,500 an ounce, and it seems to be holding above that level. We've got it about $1,503 as we enter the afternoon. So still some concern in this market, particularly around inflation, I should imagine.
Correct, Stephen. Inflation, a real issue globally, with in terms of emerging and developed markets, and we saw that with our numbers coming out this morning. And we are expecting gold to really maintain its current level and accelerate as inflation becomes very real for the global economy.
Well, the Rand trading firmer as well, R6.77, R6.78, and perhaps helped by that CPI reading, which was slightly higher than expected at 4.1%.
Correct, Stephen. Those the high inflation numbers are really, and it has not really been a surprise. It's coming from your food, your clothing, your services, and really your higher Brent spot. That is really affecting those prices going forward, and we're seeing Eskom coming through. We did, however, see in terms of Eskom that change, not really much, but we are going to see that change of 25% on Eskom really starting to take effect later on in the year.
Well, you mentioned US earnings season. We had Intel coming out after the bell last night, giving an upbeat forecast for its earnings going forward, and that seems to have helped some of the Asian technology shares such as Tencent, and in turn pushing Naspers up 4.5% this morning.
Correct, Stephen. We've seen Naspers really riding off a higher 10-cent price over the last couple of days. We saw Naspers at a low of 351 Rand on the 18th of this month, and it's run all the way up to 379. So really those results out of Intel really supporting Tencent. However, we did see Tencent come under pressure after its results a couple of weeks earlier. So it is definitely on the back of those better earnings results coming out of Intel.
Well, another share that seems to be riding on the coattails of some of its European peers, Richemont, those shares up 3.5% yesterday, rising again nicely today.
Correct, Stephen. We're seeing that whole sector really doing well, and it's really indicative of that the rich are still spending, and that in real terms they haven't had really massive losses in income, and it's really positive for Richemont. We've always felt that it's been cheap, under 40 Rand, and now the market's really responding to that.
And of course now trading at 41 Rand, so not quite as cheap. PPC, second trading update out today, looks even worse than the first one. Market's reaction to that PPC update?
Stephen, PPC, a stock that is very reflective of the building industry as a whole. They have come under a lot of pressures in those numbers. That trading statement, however, is very bleak. They're saying expecting 40% down for the last 6 months compared to the previous period last year. It is indicative, one, the building industry, and two, consumers who are really not able to expand on their homes are preferring to return against their loans, even though and we saw the last time that the bad debt ratios are coming down. However, consumers still under pressure with high unemployment, and now the threat of higher inflation. We're seeing higher food costs, higher clothing costs coming through. So not a very good positive outlook for that stock going forward.
Yeah, and the share was down over 4% this afternoon. How about BHP Billiton? They had a production report this morning, and it looked like a bit of a mixed bag due to the flooding we saw in Australia, particularly in March. But that share price responding well, and it looks like the market likes this report.
Stephen, I think it's a very good set of results there. They've come out to say, obviously, that their iron ore production is higher despite the rains. They, however, have come under pressure in terms of their coking coal, and they have really seen really good sales, production and sales out of iron ore, and they have finalized an acquisition in the States that will help them with their petroleum business, and that really with the higher oil prices, they're definitely going to see benefits coming through there. The analyst expectation is that they're going to see an increase of approximately above 70% in their earnings from the previous period last year, with the and because we've seen commodity prices rising about 42% from last year June, that those earnings are very much could be a reality, and we see that BHP Billiton price really pushing past Anglos today, so the market really liking those production numbers.